Hello, good evening, everybody. Hi, Alvin.
Hello. Hey, Benny.
All right. Okay, great. So I can hear you. Welcome, everybody. For those who have joined us, if you can hear us and you can see us, can you just type yes on the comment section so that we know you are able to hear us? And before we start as well. Okay, thank you, 𝐏𝐞𝐫𝐚𝐴. So it looks like we are all ready to go. And once again, welcome to our webinar tonight. It's called Get Trading Performance Boost with Daily Leverage Certificates, or DLCs. And we have our special guest, Alvin from Societe Generale, or 𝐓𝐫𝐚𝐼𝐺 for short. Basically, they are the issuers and for daily leverage certificates traded in SGX. So he will basically guide us through what are DLCs and how you can trade them and who they are for, and what kind of investor or market participants who actually trade DLCs. And I believe DLC is one a well-received product in SGX. So I'll basically let Alvin explain. And Alvin, welcome to the show. Thank you for joining us tonight.
Thanks for inviting.
Okay. Alvin's because maybe it's the lighting, that's why it's a little bit dark.
Yeah, sorry about that. Yeah, my room is not
we
as
can
bright.
we can still see your handsome face. Don't worry. Okay, so before we start, right, I just want to go through a few rules. Today, you actually have a chance to win a 50 ringgit top up on your Touch and Go wallet. I'll explain to you how you can actually participate as we go on towards the end of Alvin's presentation, because you have to hear clearly what he say, and in order to answer those questions. All right. And before we start, whatever is being shared here today is not for investment advice or any form of investment advice. It is for educational purposes only. So if you want to look for a investment advice, please do look for a professional and licensed investment advisor. So Alvin, maybe when you start, you can briefly introduce yourself and also explain what do you do in 𝐓𝐫𝐚 and what does 𝐓𝐫𝐚 do in general when it comes to issuing those DLCs.
Yeah, sure.
And I will be taking the questions from the floor. If there are any questions which needs urgent attention, maybe I can pause you, Alvin. Is it okay for you to answer the question?
Yeah, sure. Anytime.
All right. And of course, at the end of the presentation, you also give you a chance to actually ask more questions. All right. So Alvin, over to you.
Okay. Thank you, Benny. Thank you very much, Equities Tracker, for inviting me to share with you this product called Daily Leverage Certificate tonight. And so a bit of introduction about myself. My name is Alvin. I'm from 𝐓𝐫𝐚, and I'll give you a very quick introduction about my company. And first of all, about myself, I am from Hong Kong, and I am also currently based in Hong Kong. And so 𝐓𝐫𝐚 is, as you know, a French bank, and we have been doing different types of businesses across Asia. And then we have, maybe for those of you who have not heard of 𝐓𝐫𝐚 before, basically we are a bank that specializes in the different types of businesses, including like a traditional investment banking, as well as what we call global markets business, such as all the structured products. And also, when it comes to DLC is actually considered one of those listed investment products type. So we have been doing the business of listed investment products in Hong Kong, and we started very long time ago. We started around maybe more than 10 years ago. It's about 15 or actually more than that years ago. And then, as you may know, Hong Kong, in terms of listed investment products, I'm sure you have heard of like a warrants or maybe CBBCs, like callable bull bear contracts listed on the Hong Kong Stock Exchange. But this is not the topic for tonight, but I'm just sharing with you that this is kind of our background. And so we have been doing this business in Hong Kong. And then we, around 3 years ago, we expanded the the business to Singapore by bringing in a new type of leverage investment products, which is called a daily leverage certificates. And daily leverage certificates at the moment is still, in terms of like all the investment products in Asia, DLC on the SGX is still, the first and only type of product. So, but we also hope to be able to expand, DLC to, different countries in Asia. And so a bit of background about this DLC. DLC is actually a type of product that has been very popular in Europe over the past few years, and that's the reason why we decided to bring it to the SGX in the first place 3 years ago. Okay, and I'm personally from SocGen, and I'm responsible for all the sales and marketing and product development related matters for all the listed products, including warrants, CBBCs, and DLCs. Okay, so let me switch to the. I'm not sure if I'm already sharing my screen. Let me see. I guess so.
Yes, you're reached. So yeah, it's up now.
Thanks, Danny. Okay, let me change to that window. And okay, so this is our website. I'll be using it to share with you what DLC is about. So tonight is meant to be a product introduction, okay, about this new type of product. And all the content are for educational purpose only. And okay, let me start by going to the education and then handbook. Okay, so what is a DLC, right? I think first of all, in short, DLC is a type of leverage product that is similar to, for example, you have heard of like a warrants or like CFD, like a contract for difference. So DLC is similar to these products in the sense that it's a leverage product, and is similar to warrants in the sense that it's listed. But then on the other hand, DLC also has many other features that are more specific to DLCs only. Okay, so first of all, in terms of like the pricing, how the pricing works on DLCs, I think it's considered quite simple compared to especially warrants, because a lot of people, they have heard of warrants and then they tried it for the first time, and then after that, sometimes they find that warrants are maybe a little bit intransparent in terms of the pricing because of, for example, like the implied volatility that is embedded in the warrant, but also affects the price of a warrant. Sometimes when there's a stock, that has gone up, and then, people who bought a call warrant before, but then they realize that the call warrant is actually going down when the stock goes up. So that is one of the reasons why some people have been frustrated about warrants. So DLCs on the other hand, as you can see from this formula here. So in terms of the leverage, it's very simple. So DLC daily performance percentage equals to the underlying assets daily performance percentage times the leverage factor. So basically, for example, if there's any stock that say goes up today by 2%, and if you have a DLC that is of let's say 5 times leverage, then it's simply 2 times 5 is just 10%. That would be more or less the daily percentage change that you can expect from the DLC. Okay. At for example, if the stock goes up by 3% instead, then you can expect around 15% movement in the DLCs. What is specific to DLC? First of all, is that the leverage is fixed on a daily basis. So every day is fixed, depending on the leverage factor that is assigned to the DLC. So for example, if a 5 times DLC will always be 5 times every day. So every day you go to the same DLC, you can expect the 5 times relationship to hold, and the same for the 3 and 7 times. So in terms of at the moment, in terms of product coverage, we have already issued DLCs on major Singapore and Hong Kong stocks, as well as indices. So if you go to DLCs on indices, you can find that there are 3 times, 5 times, and 7 times, 3 different versions for you to pick. And for each leverage factor, there's a long DLC and a short DLC. So it is like similar to call warrant versus put warrant. So if you're bullish on any stock or underlying, you can buy the long DLC. If you are bearish, you can buy the short DLC. Okay. So in terms of leverage factors, for DLCs on indices, it's 3, 5, and 7. And in terms of leverage factor for DLCs on single stocks, is only 5 times at the moment. So we have only issued 5 times single stocks DLCs. Because 5 times, by experience, it's sort of the sweet spot for stock DLCs. If it is say 7 or even 10 times, maybe it's too much for stocks like I'm not sure how familiar you are with Hong Kong stocks. I'm from Hong Kong, and I have been monitoring a lot of Hong Kong stocks. And for example, things like Xiaomi, for example, is very volatile, right? Every day Xiaomi can move by easily 5% or even 8%, even 10%. Then 5 times of it would be easily 40 to 50%. So 5 times is considered a sweet spot already. So that's why. And so this is pretty much the only formula that if I were to highlight one single formula about DLC, this is the one. So this is the one that determines the DLC price. Of course, there are certain holding charges if you hold a DLC overnight, and also there are certain charges if you buy and sell. You'll be subject to broker charges. You'll be subject to a bid and offer spread. So all these are very common for you to trade anything. But then what's specific to DLC is this daily percentage formula. Okay. And let me just scroll down first. I have covered a little bit on this already. So if you are bullish, you can buy daily long DLC. If you are bearish, you can buy a daily short DLC. Later on, I will go to some of the existing products just to give an example to you of how how it is displayed in the name, whether it's a long or short DLC. And it's solely for education only. And so, all right. So how to read a DLC name? If you go to any of the brokers that has access to SGX, you'll be able to find DLCs. And then I think just by looking at the name, you can already tell what it is about. For example, this one shown here, the SGX stock code is this DANW. So this is the typical a 4-letter stock code for to identify the specific DLC. And so DLC itself is a separate counter, right? So for example, if Tencent is a Hong Kong stock that is now trading at around $500 to $600, and then these DLC is listed on the SGX instead of the Hong Kong Exchange. And this DLC is also traded in Sing dollars instead of Hong Kong dollars. So DLC can also be, one of the benefits to trade DLC is for people to, try to, who want to get access to Hong Kong stocks, right? They have to, convert a currency to Hong Kong dollars to trade certain Hong Kong stocks. And then after they, pop it, they have to, change it back to, whatever currency they use. And then, so they'll be subject to this currency exchange costs. But for you to invest in DLC, after this is traded in Sing dollars, maybe there will also be some currency exchange, risks. But for people who are, who use Sing dollars, then it's not there's no they don't have to be subject to this currency exchange. So this is another benefits that some people will see for DLCs, and so you can see that from the name, right? 10 cent and then 5x tells you the leverage factor, long or short, and then SG is actually the issuer code. So SG stands for SocGen, not Singapore. And then lastly, there's this expiry date. So every DLC has an expiry date. And here is in the format of year, month, day. Then you can see that this DLC is going to expire on the 5th of November 2021. So that already tells you a lot of things about this product. Okay. And okay, some people may be wondering already, okay, what if I hold a DLC until expiry, right? Let me touch on this quickly. So DLC is not a warrant. Some people who have experience in trading warrants, they, upon expiry, they have to check whether the stock is above or below the strike price. And if it is, then the warrant would be so-called in the money for them to be able to get some residual value from the warrant. But for DLC, DLC doesn't have a strike price, so there will always be. I cannot, it's very dangerous to say to use word like always, but most of the time you'll be able to get the residual value of a DLC upon expiry, unless if the DLC is already worthless. So if you go to our website, you can find some DLCs that are going to expire soon in the coming 1 or 2 months. And let's say today is the expiry date, and if you see that your DLC is trading at around, say, 20 cents, then if the underlying assets doesn't change at all, then the residual value that you'll be able to get back will be very close to this 20 cents. So you don't have to worry about strike price at all. So this is another I would say a benefit, or the fact that DLC in terms of product structure is just more simple. Okay. All right. So why don't we take a look at a numerical example together? It's okay. I hope you can see the screen clearly. Okay, I guess so. Okay. So this is an example on a 5 times long DBS. So 5 times long DBS is at, say, 2 Sing dollars. And if you buy 500 shares of this DLC with 1,000 Sing dollars, when the stock is at 25, first of all, every bought lot of a DLC is 100. So for all the DLCs that we issue, one bought lot is 100 shares. Okay, so you can buy in multiples of 100. And let's say you bought this DLC, and then if the DBS goes up from $25 to $25.50, which means it's up by 2%, then your 5 times long DBS will go up from whatever value it was. For example, it was at $2, then it will go up from $2 to $2.20. because in this case, it will be, you know, going up by 10%. So the percentage change relationship has to hold. So in this case, because DBS is up by 2%, then you know, the DLC has to go up by 10%. So if the DLC previously was at $2, in this case it will go up by 20 cents. If a DLC was at $10, it will go up by $1, also 10%. So this is telling us that actually DLC, you don't have to, I mean, theoretically, you don't have to worry about how much the DLC is. A $1 DLC is as good as a $10 DLC. Okay, for a $10 DLC, if you buy, you know, with the same amount of money, you will be buying, you know, 10 times less shares. But then the worth is the same, right? So, and then the same amount of money will go up by 10% if the stock goes up by 2%. All right, so this is how it works. And so same for 5 times short 10 cents. I think I'll just skip this example because for short DLC, it's just that the opposite is true, meaning that your DLC goes up when the stock goes down. Yeah.
But Alvin, can I just ask a question? You know,
Yeah.
if let's say a stock is like $10, right? And normally, if let's say Societe started to have a new DLC available, normally the price will be around the stock price, or it's lower?
Thanks for this question. Yeah. Usually we want to issue a DLC at a you know, optically friendly price. So because DLC price at launch is actually is decided by the issuer, so it's like an arbitrary price, and we can choose to issue at whatever price. And but most of the time we try to issue at a, you know, say below roughly below $2. For some DLCs we issue at a 150. For some DLC we issue at just a 50 cents.
Right.
Just yeah, so that, you know, it gives a feeling that it's a friendly price. Yeah.
But you said earlier, yeah. Sorry. But you said earlier, because it's really the price doesn't really matter. It's just that the quantity that we're buying, whether it's more or less, depending on the price of the DLC, right? Because the movement of that DLC is typically based on the movement of its underlying stock, lah.
Correct. So it's the percentage movement that matters. Yeah.
Right.
I just realized that my face is like really dark, so I'll try to get it fixed next time. Sorry about that.
No worries.
Yeah. All right. So yeah. So let me move on to, you know, some like a product comparison first. How is DLC different from other leverage products, right? I'm not sure how you guys are, you know, familiar with CFDs. So is CFDs popular in Malaysia?
Well, CFD has just started to be regulated here in Malaysia, and of course, you have the other OTC CFDs available, but being introduced as a regulated product is just being introduced, I think, in 2 years.
Oh, okay.
Yeah. So it's relatively quite new.
Kind of new. Okay.
Yeah.
All right. So CFD is one of the leverage products available in the market, and I think let me just compare DLCs with like all sort of leverage products in general, right? I think there's a table down below. All right, here. Yeah. So you can see that, first of all, DLC is exchange traded versus CFDs, which is not. And I think being an exchange traded product, DLC is more transparent because, for example, CFDs, if you go to different, if the product is OTC, then if you go to different product provider, it is very likely that you get a different price. And you may be better off, but you may also be worse off. You don't know, right? Unless you compare all the different providers. So I think being a listed exchange listed product, DLC is more transparent in terms of pricing because every investor sees and gets the same price. And the second thing is that the DLC is listed on what we call the cash market of SGX. So there's no risk of margin call because DLC is simply not traded on margin. And then for example, you buy DLC with like a 1,000 Sing dollars, then this is already the total amount that you put in, and you won't be subject to any margin. And this 1,000 Sing dollars is also the maximum loss that you could potentially incur. For example, say DLC 5 times long, and then if the stock goes down by 20%, then your DLC will be gone because 20 times 5 is already 100%. But if the stock is down by more than 20%, which in some cases for certain stocks can happen, if that's the case, your DLC will only go down by 100% as well. So your loss is actually capped. In this case, DLC will go to 0, and whatever initial money that you put in the DLC will be gone. But then it's actually the issuer, for example, in this case, us, we provide the DLC, but then on the other hand, we also, need to hedge the exposure of the DLC by most of the time buying the actual underlying stocks. So in this case, it's actually the issuer who bears the extra, loss in the stock. Because if the stock drops by, say, 25%, our hedge actually drops by 25%. So we lose more than 100% in that case. So this is another, benefit of a DLC.
Yeah, Alvin, if I may, if let's say your DLCs go to 0 because 100% is basically wiped out, will the DLC get delisted if it goes 0?
Yes, it will be delisted.
Okay. Because I was thinking of if the stock rebounds back again and then it goes 0 and it revives back again. So it does not. So once it goes 0, it's just basically being taken off the exchange.
Correct. Yes.
Right.
So this is you can say is one of the product features that we need to be aware of. When we invest in the DLC, whenever the daily percentage movement of a stock is more than 20%, the DLC will be wiped out and be delisted.
Okay.
Yeah.
So like you said, the risk, compared with even the futures product, you get margin calls, and as long as your position is open, you have to continue to top up the margins, right? And you can actually lose more than what you've actually put into your account. But for this, if you invested, let's say $1,000 worth of DLC, and that's your maximum risk, right?
Yes, that's right.
Okay, thank you.
Okay, and so going to next is the structured warrants have time decay and implied volatility, as I briefly mentioned when I started, because structured warrants is actually an option by nature. So every option is subject to these time decay and implied volatility. So I have talked about implied volatility. So, but in terms of time decay, I'm talking about the time decay that increases with time. So as the product is closer to expiry, your decay every day increases. Okay. So, for example, if it is like a couple of days before expiry, your product can be dropping at maybe 5 to 10% per day, even if the stock hasn't moved, because of this exponential time decay on structured warrants. But for DLC, there's a holding cost because DLC is a leverage product. So if you buy this leverage product, it is actually similar to you borrowing money from issuer. So in that case, you'll be subject to paying this funding cost. But this funding cost is like a linear funding cost. So it doesn't like increase with time. It's more or less the same rate every day. Of course, the longer you hold, the more you pay, but it's more or less the same rate every day. And so this is another reason why we always emphasize that DLC is more simple than other leverage products. Okay, and but you see that there are two rows, on the bottom of this table. One is this compounding effect, and the other is airbag mechanism. So these two are specific to DLCs, or at least specific to like a daily leverage products type. Besides DLCs, I'm not sure if you have ever invested in those leverage ETFs available in US. They're super popular in US. Right, like those 3 times, say on oil or gold, right? So all these daily leverage products, be it leverage ETFs or DLCs, have this compounding effect. And so DLC, because the leverage is more than 3 times, stocks are 5, and then for index it can be 7. The compounding effect can also be larger. All right. So I'll talk about these compounding effects first, I guess, before jumping to airbag mechanism. Right. Okay. So yeah, this is it. This is the topic on compounding effect, and I think compounding effect. I should be able to put up some examples to explain it more clearly. Right. So okay, let's go to these theoretical one first. All right. So basically, what compounding means is that because every day, as the stock goes up or down, your leverage actually increases or decreases depending on where the stock goes. So at the end of the day, if the stock has gone up, and if you bought a long DLC, in that case, actually at the end of the day, your leverage is actually less than 5 times if the stock has gone up. But because for DLC, we always have this 5 times daily relationship, right? So at the end of the day, we actually have to do a daily reset on the DLC to make the leverage back to 5 times. So meaning that the next day onwards, the leverage will be 5 times again. So in that case, if the stock goes up and up and up, like a couple of days in a row, every day at day end, you actually leverage up, because every day at the end of the day, your leverage decreases, and then you move it back to 5 times. So you are effectively leveraging up. So in that case, if the stock keeps going up, you'll be better off. And as you can see from this example, so day one, this HSI is the Hang Seng Index. Say HSI goes up 2% every single day on day 1, 2, and 3. And after this 3-day period, HSI is up by 6.12% as a whole. And on the right-hand side, you have this DLC, 5 times daily long. Every day it goes up by 10%. And then at the end of this 3-day period, it's actually up by 33.2%, which if you did the calculation, is actually more than 5 times of 6.12%. So this is where you get a positive compounding, because the stock has been going up in a trend. So this is when you benefit from compounding effect. So I just want to emphasize that compounding effect has nothing to do with the charges. So we has nothing to do with the issuer. It is simply a mathematical calculation. So compounding is neutral. It can be good, can be bad. So in this case, when the stock goes up, it's good. So when the stock trends up, it's good. On the other hand, if the stock trends down, say going down by 2% every single day, you will also be better off. You'll be better off by losing less. So you lose less than 5 times in this case. So whenever the stock trends, no matter it trends up or trends down, you would both be better off. But in scenarios like here, if the stock goes down by 3% on day one, and then down by another 4% on day two, and then up by 9% on day three, and then overall the stock is still up, it's up by 1.5%. But then in this case, it could be the case that you actually make a loss on the long DLC because of this up and down and up and down compounding. So in this case, you'll get a compounding loss. So that's why I think DLC, because of this compounding effect, is actually more positioned as a trend trading or swing trading product. And if you buy a DLC and then, for example, and after you bought it, the stock goes down, and then you got a wrong bet, and then but if you have confidence that the stock will go back up to at least this level eventually, in this case, we don't recommend you to hold on to the DLC, because unless you think that the stock is going to rebound very, very soon. If you do not know for how long, you just think that in the future it's going to be to come back. In this case, it's very likely that you'll get a compounding loss like throughout the period, because you have no idea how long this period is going to be. So in this case, we would recommend you to just cut loss, and then to explore another investment opportunity. So that is how to trade DLC, because DLC is meant to be a short-term swing and trend trading product.
Yeah, just because the mechanics of it is that the DLCs are being reset at the end of every day, right? And that's the reason why you get this compounding effect. Of course, if it moves in the same direction, if you are trading in that direction, you can actually make more, like you just presented. Or even if let's say you bought, but the share go down and it goes down consecutively for the next 5 days, you'll still be losing the 5 times effect on the underlying asset, but it's lesser, right?
Yes.
So this one will be a bit riskier if, let's say, you are trading in a very directionless market, right? Where it can go up today, and then the next day it can go down, and then the next day it goes up again. And because if you compound that, then of course you'll be actually making loss, although prices just go sideways, right?
Yeah, I think the way I put it is, if the stock that you invest in by nature, if it is more volatile, then consider investing for shorter term. But then if there are other stocks that, for example, I remember, for example, like Singtel, I think in around there was a bull run of Singtel in around August last year maybe. Basically, there was a very long trend that happened for around 2 to 3 months, upward trend in Singtel. So in those cases, because Singtel is also considered one of the less volatile stocks. Right. In this case, if you buy long DLC, you can consider holding for a longer period.
Right.
Yeah. I think maybe it'll be good if I share some examples. So in fact, this is just the product introduction page on the website. Our website actually has got a lot of like a market data, and then all the different like a product and their performances as well. So maybe let me put up one of the weaker stocks. What I think of is actually Alibaba.
Right. For those who are listening, sorry, Alvin. For those who are listening, we actually put the website for the SocGen's handbook. We just put in the comment section, so you can actually click on the link to go to the page that Alvin is actually viewing right now. Okay, sorry, Alvin. Yeah, I can go on.
Hey, no worries. Okay, right. So Alibaba has been weak, right? So let's put up this Alibaba short. DWNW is the trading code, and then it's Alibaba 5X short SG expiry date is going to be 2023 June 27th. A. Okay, A simply means that there are, you know, like two DLC with exactly the same term. So this is just to identify this, you know, distinguish this from the other one. And so today the Alibaba is down, and then, you know, this short DLC is up. Let me go to this tab here called a historical compounding return. And then we can see that in the past, say, couple of days, right? So what I'm doing here is that I can drag to select a period in the past, and then, you know, to see that, you know, the DLC performance versus the underlying performance, right? So in this case, over the past 32 trading days, Alibaba went down by 17%, and this DLC went up by around 60%. So if you do the calculation, 17 times 5 is 85%, right? So in this case, after deducting all the costs and fees, maybe you can say that the DLC should be up by maybe around 80, but because of the compounding loss, so the DLC only went up by around 60%, right? So in this case, you are talking about a 32 trading day period. You know, whether it's long or short, I don't know. It depends on your view.
Right.
Yeah. So in general, I just want to share with you that people who trade DLC, on average, the investment horizon is around 4 days. Okay, so this is like the very rough average across all the trades. It's around 4 days. So some people day trade a DLC, and some people hold it for like 2 or 3 months. Yeah. So I just want to, you know, give you an idea of how much of a return it can deliver to you if you hold it for, say, a 32-day trading period. Yeah. And you can also feel free to, you know, select whatever period in the past to see. But obviously, if you select a super long period, if you select for, say, 1 year, then very likely you will see a big compounding loss. You are more likely to get a compounding gain if you invest in a DLC for the short period. So that's also another reason why, you know, DLC is meant to be a shorter term, you know, trading product. Okay, let me switch back to handbook. I was here. Okay, so compounding. All right, so we have already covered it. Lastly, about these airbag mechanism, right? Before we end the product introduction session tonight, I hope it is not too, you know, boring. And so airbag mechanism. Airbag is really specific to DLC, I would say. It's not even in leverage ETFs. So airbag, as you can guess, is some mechanism that slows down things, right? So it's some mechanism that absorbs the impact. So for DLC, you can see that there's like a daily trigger threshold. For example, for single stock 5 times DLC, the threshold is at 15%. So if any stock changes by more than 15% in a day, then airbag mechanism on that DLC will be triggered. And in that case, the DLC will enter into a suspension period for, say, half an hour to 1 hour. And then after that, the DLC will resume trading, but with a reduced leverage. So if after the DLC resumes, and if the stock continues to, say, go down, then the loss in the DLC will also be less. So that's how airbag helps to slow down the loss. But if on the other hand, because airbag is also neutral, so if on the other hand the stock rebounds after the suspension period, the recovery of value in the DLC will also be less. So yeah, so that's how airbag mechanism works. I don't want to put too much focus on this mechanism, because this mechanism is meant to be a safety mechanism to reduce the leverage when during adverse market movement, but it's not supposed to happen very often, right? We have to understand how it works, but don't be over concerned about it. For certain volatile stocks, obviously 15% is achievable daily, but for stocks like a DBS, chance is really low. And what's more important is that if you have a long DLC and if the stock goes down, then airbag can be triggered when the stock goes down by 15%. But if you invest in a long DLC and the stock goes up, no matter how much the stock goes up, airbag is not going to be triggered. So the stock goes up by 20%, you make 100% return. The stock goes up by 25%, you make 125% return. The airbag will not be triggered on the long DLC in this case. It will only be triggered on the short DLC.
Right.
Yeah.
The active trigger that you put there is the 15%, 20% is based on the underlying percentage change, right? Not the DLC change. Right?
Right. That's right. It's based on the underlying percentage change. Yeah. And it's a daily percentage change. So today we only look at today, like compared to yesterday previous closing price.
Right.
So we only look at the daily percentage change. Yeah. So I think I'm going to skip all these given the time concern. Lastly, I think people may be wondering, okay, what is the cost and fees that I'll be paying if I invest in the DLC? So I don't want to complicate things, because on our legal document, DLC costs and fees actually can be broken down into 5 types. So we have 5 different, say, costs and fees, including funding costs, balancing costs, stock borrowing costs, and what we call gap premium, and lastly is the management fees. But I just want to give you an idea of how much it is in practice. Say for you invest in a stock DLC, on average, if you hold a DLC for say 2 weeks time, right? The cost is around 1 to 1.5% of the DLC price. Meaning, if the DLC is at $1 when you invest, then after 2 weeks period, if the stock hasn't moved at all, then at the end of this 2-week period, the DLC may be trading at 99 cents or say 98 cents. So it's roughly this much of a cost. So, but this is separate from compounding and like the leverage performance. So just the cost and fees is about 1 to 1.5% every 2 weeks.
Every 2 weeks.
And every 2 weeks, yes. Roughly speaking, just to give you an idea. So I just want to emphasize that when you invest in DLC, cost and fees is not the major concern. The major concern is whether the stock will go in a trend, and whether you will get whether you're likely to get at least the leverage factor that the DLC is designed to provide. If you think the stock is going to be super volatile or sideways, you don't really see a trend in the stock, then maybe DLC is not the right product. At least not for those timing. But if you think so, then you can consider using DLC.
Right. And then the costs that you mentioned, right? The funding costs and all that the investor don't get charged for it, but it's being just reflected on the price of the DLCs, right?
Yes, thanks for pointing this out. Yes, you're right. So we don't charge these costs and fees separately. So how we charge is that we reflect it in the pricing. So no matter people trade a DLC or not, the DLC theoretical value will keep dropping gradually by this cost and fees amount. Yeah.
Yeah, but because you're trading on a leverage product, you don't really see any significance when it comes to the fees.
That's true. That's true. Because as the stock goes up or down by say a couple of pips, then you know the DLC moves already.
All right.
Yeah. Okay. So this is about the cost and fees, and you can see that it's almost the end of this handbook. So we, as a market maker, we have the obligation to provide the continuous bid and offer in the DLCs. So whenever the stock or the index is trading, we have the obligation to provide the market making, unless, for example, in certain scenarios, for example, if we have sold all the issued position in a DLC, we will not be able to provide the offer. But then on the bid side, everything remains normal. So these are some cases that we are not able to provide two-way market making. But other than that, you can expect that whenever the stock or the index is trading, the DLC will also be having a continuous bid and offer that moves good with the underlying stock or index.
Right. Yeah, because one of the worries, especially when it's a new product to maybe Malaysian investors, is even like ETFs here. There's always a question of liquidity, right? And you know, actually, volume attracts investors or traders, and because like here, I'm not sure about DLC. Maybe you can answer that in a short while. But in ETF, when we look at the price, you see that there's no buyers or sellers, right? But of course, the market maker said that they have an obligation to actually make sure that there is this buy and sell or two sides of a prices mechanism. But you know, when they see that there's no volume there, you know, can I really buy? You know, is there enough liquidity or not? But how is the take up of DLC in Singapore?
Okay. First of all, to answer your question, in terms of market making, I think DLC is similar to ETFs in the sense that there's a market maker mechanism, and you're right. Market maker always say that, oh, we are, you know, keep providing continuous market making, so you don't worry about the on-screen liquidity, whether people trade it or not. Yeah, but still, I know. So people still are concerned about whether I'm the only one, you know, trading the product, right? So that's the same for DLC. So of course, we also want to make every single, you know, DLC popular and liquid. And but the case is that we have too many products, and so we can only have you know, people's attention on certain products. So so if you look up our product list, you see that for certain underlyings and for certain price range, those DLCs are the most popular. For example, like recently, for example, if you have a product on a Xiaomi or on a BYD, you know, those kind of very hot stocks, and if the DLC is at say 30 to 50 cents range, then those are usually the most popular products. And but again, you know, for those of you who believe in market makers' capability, then you don't really have to worry about the liquidity, because we simply have the obligation. Because if we don't provide bid and offer quote, will be questioned by the regulator.
Yeah, I guess you know, we have also been promoting ETFs. You just have to actually give it a try to trade. You know, whether it's ETFs or DLCs, to actually see how this thing works. It's just that because a lot of people, they do not dare to try. Like you said earlier, am I the only one who's trading, right? But yeah, I think, you know, guys, you just have to give it a try and see how it actually works. So the market makers are there.
By the way, Benny, just to answer your question, sort of pick up. So every day, all DLCs together, the turnover is around 20 million Sing. Like everything combined. And in terms of outstanding value, which means how much worth of DLCs you know, the public is holding, we started 3 years ago. So at the end of the first year, it was around 3 to 4 million SGD, and
Mm.
now it is around 25 million SGD already.
Oh, okay.
So yeah, so in terms of outstanding, it has been increasing by a lot. And just to also give everyone an idea, the outstanding value of warrants in Singapore is around 3 million, while that for DLCs is around 25 already. So it kind of tells us that tells like people, as they come to know how DLC is simpler than warrants,
Mm.
they are more comfortable to hold DLC overnight.
Right. Because most of the traders who trade warrants, because it's cheaper than its underlying asset, that you get the extra leverage, right? By buying more of those warrants as compared to the mother share. But like you said, if DLC provides much more simpler alternative to warrants, and that's the reason why you see there's a very high take up on DLCs. And the volume is actually quite a lot of big difference about the outstanding for DLCs and also warrants in Singapore. I didn't know that.
Yes, yeah. So it's been quite encouraging to us as well.
Okay.
So yeah, so I think this will be the end of my sharing tonight, because tonight it's meant to be a like a introductory. It's like a DLC 101 to you, and feel free to let me know if there's any questions on DLCs.
Mm-hmm. For DLCs, Alvin, can anyone trade DLCs? Because like in Malaysia, we have just introduced the CFD product, and you have to be tagged as a sophisticated investor to be able to trade CFDs. So is there any requirement for trading DLCs?
Right. Okay. In terms of qualifications, in Singapore, I understand that DLC is considered a specified investment product, similar to other products like synthetic ETFs or like futures on options. So investors would need to become SIPs by either passing a test or declaring they have a certain investment or education background, and then after they have become SIPs, they are able to trade the product. So, but I'm not sure if that applies to Malaysia.
Yeah, they basically have to have certain requirements before they can. They of course have to go and actually make a declaration and also provide documents to support what they have actually declared. Yeah, so there is this barrier. There's this friction actually for this kind of so-called highly risk products.
Yes, that's right.
Okay. All right. So, guys, if you have any questions for Alvin, you can type in those questions. It's been pretty quiet here. Maybe they are trying to absorb what you are saying. But you have any questions at all, you can ask those questions. And what I'm going to do now is basically to share with you how you could win the 50 ringgit top up. So basically, I'll give you a link for you to go into. It's a Google form, so you have to answer those questions. And the first 5 person who answer the questions correctly will stand a chance, will win that 50 ringgit top up. So there'll be 5 winners. All right. So the first 5 who answer the questions correctly will get that 50 ringgit top up. So my colleague will put in the link right now. So all you need to do is to go into the link and answer those questions, and we will announce the winner at the end of this session. All right, so please do key in, and at the same time you can ask Alvin any questions pertaining to DLCs. All right. Okay, so let me just get the questions going first, while the others are thinking of any questions. So for DLCs, you mentioned that you have in Singapore on SGX itself, you have stocks and you have indices, and of course you have stocks which are listed in Hong Kong as well.
Yeah.
But not all stocks, right? And you can actually get the list from the website that you have?
Yes, let me show you and everyone. So on the product page on the website, first of all, let me go to this, go back to the landing page, and then so if we go to this product section, then under daily leverage certificate subsection, there's this search, and then then you can see that there's a whole long list of different DLCs, and so at the moment we have got 162 DLCs available, and if you click on this underlying drop-down list, then you can see that we have DLCs on all these underlines, not all the stocks, because to have a DLC listed, we have to consider whether the underlying stock is liquid enough. And most of the time, we can, for example, if it is index component, usually it's fine. Even if it is not, then we have to assess the product liquidity, and if it is enough, then we will be able to launch a DLC. And so you can see that at the moment, we have 3 indices, this MSCI Singapore index, and then Hang Seng Index, and then Hang Seng China Enterprises Index, these 3 indices. And then in terms of stock, we have like these Hong Kong tech stocks, like AAC Tech or Tencent, Alibaba, JD.com, and then like recently the BYD has been very hot, and then yeah, all these other Hong Kong stocks. And then for Singapore, we have pretty much covered the index stocks. So we have the DLCs on big banks, DBS, UOB, OCBC, and then we have DLCs on others like SGX itself, or like 𝐓𝐫𝐚𝐝𝐢𝐧𝐠, or like 𝐓𝐿, So these some of them have been quite popular recently as well. And so let me just add this thing, right? So if say today, for example, this DLC on Geely Automobile is actually the top traded DLCs of the day. So the turnover is around 1 million Sing, and it's a 5 times long on Geely, and this DLC is going to expire in 2022, so still have a very long time before it expires. And so today, right before market close, we were bidding at 65.5 cents and offering at 66.5 cents. So the bid and offer spread is usually between 1 to 3 ticks, I would say, depending on the price range of the DLCs. And sorry, yeah, allow me to add this. One more thing is that if you go to the in this product page, and then you scroll down under this trading data, you will be able to see that this DLC, in terms of outstanding quantity, which means how much quantity we have sold to the market, is for this DLC is 2.4% only. So meaning that for this DLC, the issuer still has a lot of inventory to sell. But this may not always be the case. For some DLC that is very popular, maybe this percentage is at say 80 or even 90%, then you have to be careful, because if the DLC is sold out, we will not be able to provide offer. And then if you go to the order book of that DLC, then you probably will see a very wide spread, because we are not on the offer side. Yes. Right. So yeah.
Okay, so you mentioned that for indices, the underlying asset which is index, we actually have 3 leverages, right? One is 3x, one is 5, and one is 7. So they actually can choose whichever leverage that they want.
That's right.
But stocks is only fixed at 5%, right? Not 5 times.
Correct.
Sorry.
For index, We used to have 3 times, but we, as the 3 times expire, we tend to, not we replenish the product, because people who invest in leverage products tend to go for higher leverage. So 3 times isn't popular at all.
I see.
Yeah.
Okay, so you reckon for those who have just started in investing in the stock market, do you think this product will be suitable for beginners in the stock market itself?
I think not beginners in the entire investment market. If you're a beginner, like to even stocks, then I probably won't recommend you to trade DLC. But if you have some experience in trading stocks, then I think in terms of a leverage product, DLC is on the easier side among all the different leverage products. So if that's the case, then maybe you can trial DLC as your first leverage product.
All right. Okay, guys, if you have any questions, you can type in. I don't see any questions. Maybe they are still answering those questions. We are getting responses right now. So keep on answering. If you have the link, it's already posted on the comment section. So just click on the link to answer just very basic questions to actually win that 50 ringgit top up on your Touch and Go. Okay, so for you mentioned that the DLCs actually has expiry, right? And of course, it's not really short. I mean, there are some which expires in 2023, 2022, and so on. But what happens, right, if let's say I'm holding the share and there's the share, the DLC price is currently at 50 cents. I probably bought it at $1, right? And it's now at 50 cents. So when it expires, what's going to happen actually?
Okay, let me put up one of the FAQ that tells us how it works upon expiry. So in the education section, we just went through this handbook, which is like all the elementary things about DLCs, and we actually also have this FAQ section that answers most of the more like the practical questions when it comes to actually investing in a DLC. And so in terms of expiry, you can see that there's this question here. All the DLCs have an expiry date, and what happens when my DLC expires, right? So first of all, I think we have to bear in mind that the last trading day of a DLC is not the expiry date. It's actually 5 days before the expiry date. And after last trading day, the DLC will enter into a suspended state before being delisted. And but then the thing is, the DLC value still changes from the last trading day all the way until the last day. The day before expiry date. So the day before expiry date is what we call valuation date, and that day is the last valuation for that DLC. So after valuation day, the DLC will be the price, the final settlement value will be determined, and then it will be settled on a day that is a couple of days after expiry, which is usually 4 days around after expiry, meaning that after last trading day, you can't trade a DLC, but the value keeps changing with the underlying all the way until the day before expiry. Oh. So this is some risks that we have to bear in mind if we choose to keep the DLC all the way until expiry. But there's certain benefit of holding DLC to expiry, because you don't have to sell it, meaning that you don't have to pay the commission to broker. And then upon expiry, the DLC will be settled at the settlement value, and then you can get the money back without having to pay the broker commission. And SocGen doesn't charge any expiry fees. So in this case, you actually can save the commission, but there could be certain charge by the CDP, the Singapore CDP. But we are not responsible for that part of fees, so we don't know how big it is. But usually it is smaller than the broker commission. So if you still have, if you still believe that, for example, if you bought a long DLC, you still think that the stock is going to go up from last trading day to expiry, then you can choose to keep the DLC all the way until expiry, and then you will be able to get back the money around 4 days after expiry. And then most of the time, the issuer would have already issued another DLC of say 2 to 3 years long, around 1 to 2 months before the expiry of the existing DLC. As you get the money back, you can just switch it to a newer DLC.
Okay, I just want to pose a question to you, Alvin. If I've been investing in the stock market, maybe this is basically a sales pitch from you, but can you give me 2 reasons why I should be considering DLCs? If I've been investing in the markets for some time, what would be the main 2 reasons? Let me just give 2 for me to actually look at DLC.
Okay, sure. I think as you have been in the market for a certain time, then for stocks that you are familiar with, I think most of the time, maybe you are holding certain stocks for a very long period of time. So for certain stocks in your portfolio, you think it's a buy and hold for even forever, for a very long time, right? But I think as you come to understand certain stocks, you also tend to have some short-term views. For example, when you think the stock goes to say certain resistance or support level, then you think it's going to turn around. In this case, I think you can really consider putting some of your capital, not all, putting some of your capital in DLC to capture this short-term investment opportunity. And by allocating say 5 or 10% of your capital to certain leverage products, the investment period doesn't have to be very long, maybe just 2 or 3 days or say a week. If you get the direction right, then you'll be able to get a very like a decent investment return. So I think that's the beauty of a leverage product by nature, right, in the first place. And that's the first reason. And the second reason is that among all the leverage products, I think DLC is simply one of the most simple product type that you can find. So it doesn't have all these implied volatility, doesn't have time decay. There's holding costs, but it's not going to increase with time. So it's meant to be a more simple leverage product that we know what we can expect. So every day is a 5 times relationship, right? So I think if you are new to leverage product, then you really should consider DLC.
Right. Thank you so much, Alvin. All right. So guys, if you still have any questions, you can ask. We only have about another 10 minutes left. I will announce the winners for the Touch and Go top-ups in 5 minutes time. Right? We give chance for those who have not filled up the form. So in 5 minutes time, we'll start looking at those answers and we'll announce the winners. All right. So because Alvin, we actually posed a few questions on when they fill up the form, right? And one of the question is, have you guys traded DLC? So out of the participants, we actually got 92% have not traded, and there's actually 7% who have already traded CFDs. All right, so some of them has already traded. There's also a response where, of course, this is a Malaysian market, a Malaysian audience that we are talking to. There are 69% who have not invested in Singapore. But that 69% also says that they're interested, maybe because they think that if they answer no, they are not interested, they will not win the prize. But yeah, 69% of them, right? 15% actually have invested in Singapore. So we are just getting these details. So guys, you have been investing in the markets, and if you are investing, especially already in Singapore, you can consider trading the DLCs. Like Alvin has actually just given you two reasons, main reasons, but of course there are many other reasons that you should be considering. And I personally find it quite interesting. When I have actually talked to SGX, I didn't know even this product exists until a few weeks ago. And so today I get a much clearer picture of what's it all about. I've traded the futures products. I've traded CFDs, but so this is something which is quite interesting, because one of the interesting that I found out about this is, your risk is based on your maximum risk is basically based on how much you actually bought that DLCs, right? So $1,000 means your maximum risk will be $1,000. But in futures trading, if I put $1,000 there, it doesn't mean that my maximum risk can be $1,000. It can be more than that. So I think there's a lot of hybrid here between options, between futures, between CFDs. But of course, this is much more simplified version of all the other, like you rightly mentioned, all the other leverage products available. So yeah, I've not invested in DLCs, but maybe I should give it a try, right? And guys who are listening as well, you probably can give it a try as well. Okay, so well, there's still quite quiet here. Nobody's asking any questions. Maybe I should give a prize for those who are asking questions as well. Maybe they're just too shy to ask questions, or
yeah.
Well, don't worry. We actually have another session, and Alvin will be joining us again next week. This is where we'll give you more examples. In fact, I'm going to come up some examples and see what you can make out of trading DLCs. And of course, for me, I always look at charts, right, and technical analysis to make my trading decisions. So, Alvin, do you think that those who have a knowledge in technical analysis or price chart analysis would be able to benefit from this?
Definitely. Yeah, because if you are good at technical analysis, you'll be able to identify turning points more easily, more often, more accurately than others. Then you'll definitely be of having an edge. And DLC, as described, is positioned as a trending product. So if you're able to spot those turning points, then it'll be more likely for you to get a positive compounding return, so that you'll be also better off trading DLCs.
All right. Okay. Well, we have a response from Sharul Abdurrahim that says that DLC is new to me. Well, Sharul, DLC is also new to me, but today I've actually learned about it. Maybe Sharul, you can also let us know whether you actually able to understand DLCs today after explanation from Alvin. Well, Sharul is asking, how much annual return can we expect from DLCs?
Well, simply speaking, it's a 5 times of your annual return. Yeah, because it's a 5 times DLCs. Yeah, I mean, DLC is a short-term trading product, and I think as I just described, I think if I were to highlight one key risk or characteristic about DLC, is the compounding return. So so I think if you understand compounding return correctly, then and then you invest in the DLC, and then you get a positive compounding return from the DLC, then you will be able to get a very decent investment return from having a correct view in the underlying stock.
Yeah, and that's the reason why we actually named this tonight's webinar "Giving Trading an Additional Boost." Right? It's like giving some adrenaline push on the money that you have. Right? So it's basically like trading any other stocks, right? But except of course you have this 5 times leverage, and you have to also be aware of the compounding effect, like Alvin mentioned, because the calculations may be different. We'll be expecting, if the price goes up, let's say 90%. You'll be expecting 450%, but then you find out that you're actually only making maybe 400%. and then that's maybe if you do the calculation on the compounding effect, then you get the real the returns. And I think if you go to the website that Alvin has shown, you also have that simulation, right, to tell you how the compounding effect works and how much what kind of
Yes, that's right. Wow, you're familiar with the website as well.
I've listened to you very, very thoroughly.
Yeah, so on our website, under the products tab, there's this simulator. I mean, there are also other gadgets as well that you can check out if you're interested. And so for this simulator, it allows you to say specify like a daily return of an underlying. For example, it allows you to simulate like different paths of the underlying, and then tells you where the DLC will go. So you will be able to tell, for example, like upward trending versus downward trending, then where the DLC would end up at, and then like a sideways market, and then you can change the percentage change of the underlying every day,
Right.
to simulate it.
All right. Yeah, so this is one of the tools that we're gonna look at further next week, right? When we talk about how you can actually apply all these tools and help you, I think the tools that's provided on the website is quite significant, is quite useful, and of course, with the help of technical analysis or price chart analysis, you are able to make better decisions now, right? So we're gonna cover more of this aspect when we come back again next week. So today is basically to only an introduction of what DLC is all about, and hopefully it will get you interested to actually look at DLCs and start trading when you are ready. All right. So now before we end this session, it's already almost 9:30. I'm just going to announce the winners. We will put the names on the comment section. But these are the 5 winners, right? Not in any. Of course, these are the first 5 who answered the answers correctly. Okay, there are some actually answered wrongly as well. But these are the ones who answered correctly. So the first winner is King Lee. Second one is Edmund Che. Third one is Lee Su Lin. Fourth, Peng Ling Lee. And number 5, Ng Po Hong. Okay, so for these 5 winners, we're going to email to you on how you can actually get the top-ups. So hopefully that you have actually inserted your email correctly when you fill up the form, because that's where we're going to contact you. And for those who have participated, thank you very much for participating. If you can't win this time, maybe you should come back next week, because next week you stand a chance to win again. All right. And also next week, Alvin will be joining us as well. And to talk more on the application, right? How you can actually trade. And one of the things that he may want to share with us as well is how you could use the tools like simulators and so on and so forth. Will we be doing that next week, Alvin?
Yes. Definitely. Yep.
All right. Okay. Shahrul says, okay, looks very attractive. Thank you very much. Okay, so yeah, no questions actually coming from audience. Hopefully next week. I think next week we're also going to offer prizes for those who ask questions. Okay. Yeah, I'm the only one who asks questions right now. And anyways, so we have actually put the link, the handbook for DLC. So you guys want to have more information on, the website that actually Alvin go through. You have the handbook over there. You can click on the link and get more information. And if you have any questions, if you want Alvin to answer, you still have a chance to meet him next week. All right, and you can still he can still answer your questions. So please do make a research and study about DLCs. The handbook website is over there. Just go through it and write down any questions that you have. And if you have any questions, you can always, of course, contact SocGen as well if you want to immediately, or you can hold your questions and bring it next week. All right. So before we end, I'm just going to share with you, of course, in order to trade the DLCs in Singapore, you have to have an account in Singapore. All right. And you have to open an account in Singapore. I'm just going to share with you some of the brokers that you can go to open an account in Singapore, and some of them are also represented here in Malaysia. You can also look them up so that you can actually open an account to trade the SGX or products in the SGX. All right. But first of all, if you want to have more information about Singapore, since we are being Malaysian, and one of the resources that you can get is actually from SGX website, right? They have investor resources, they have analyst research reports, they have SGX Invest, where you can get lots of information on what's happening in the Singapore markets. All right, so you just go to SGX website. There's a link there. You can actually just do a scan to go to the website, or just go to sgx.com or SGX Academy. All right, and of course, SGX also have a mobile app where you can get all this information as well. Okay, now if you want to open an account, you can go to these two brokers which provide online broking. That means you can open an account online without going to be present. All right. So one of them is 𝐓𝐫𝐚𝐝 Securities. You can go to the website there. It's at poems.com.sg. And then we also have tigerbrokers.com.sg. These are currently the two brokers that allows you to open accounts online. All right. So easier access. And these are Malaysian brokers that have Singapore reach. All right, so if you have, you can actually go, and these are the contact numbers you can actually contact. You can take a screenshot if you want to. So you have 𝐓𝐸quities, Kenanga, CGS, Maybank, UOB, Interpac, and Public Investment Bank. So you can actually open an account here, right in Malaysia, and you can trade Singapore. And of course, you can also inquire about DLCs. All right. And for those who want to get more information on our on the SGX market, not just DLCs, but anything that's got to do with SGX, you can always join our group. It's called ET Online Campus SGX. And that's where we discuss about the Singapore markets. All right. So that's all the info that I want to share right now. And you know what? Thank you so much, guys, for joining us. And again, Alvin, thank you so much for joining us tonight. We're looking forward to seeing you next week again.
Yep.
Today we are actually officially going. Not today, actually tonight at 12 a.m. We're going to go on another lockdown in several states, including KL and Singapore, KL and Selangor.
Okay.
Yeah, because the cases have been rising quite tremendously. So that's why the government decided to go on another lockdown. So we probably get more people next week, because everybody will be staying at home and they have to come online.
Stay safe, everyone.
Yeah, today is the last Freedom Day. Okay, maybe they go for a dinner or something, to celebrate before they go on the lockdown again.
I see. Stay safe.
All right. So Alvin, thanks once again for joining us. We'll see you again next week. Have a really good evening. And for those again who have joined us, have a good evening, and we'll see you again next week for this second part of DLCs. But of course, we'll still go online live tomorrow for our Mandarin session. So do join us live tomorrow as well. Okay. So thank you very much, and have a very good evening.